Alright, you diamonds, it's your boy East End Dave, back again. And today we're talking about that shiny stuff we all love, gold. And let me tell you, she's glimmering like the Queen's teeth on Coronation Day. Gold's had a right cheeky little jump, so let me break it down for you. Old school style, dollars, pounds, the lot. What's gold at today? So first off, as of this morning, 2nd of June 2025, gold's sitting pretty at $2,512 per troy ounce in Yankee money. And in proper British quids, that's £2,495 a pop. That's right, near an all-time high. For us Brits, stackers are loving it and investors are running to it like it's the last pint at the pub. But why is it rising? That's what you come to old Dave for, innit? Why is it jumping? Now listen up. There's a few reasons gold's gone full Del Boy and pulled a fast one on the markets. 1. Geopolitical drama. The world's in a right state. Russia's back in the news, China's jabberings about trade, and the Yanks are banging on about tariffs again. Markets don't like that sort of tension, and when the world's on edge, everyone piles into gold. Because gold don't argue back, does it? 2. Central banks sniffing around cuts. The Fed in the States and even the Bank of England are hinting at maybe easing up on interest rates. That makes cash look less tasty and gold look like filet mignon. With yields dropping, folks would rather hold something that glitters than a bit of paper that earns now. 3. Weak dollar. The dollar's taking a breather, sliding just enough to make gold cheaper for buyers overseas. When Uncle Sam's currency gets a wobble, gold takes the crown. Pound's held up alright this week. So in sterling terms, we're still riding higher at £2,495 an ounce. What's the smart money's doing big institutions, hedge funds, even your nan's financial advisor? They're all quietly filling their boots with bullion. Central banks in Asia and the Middle East have been stacking gold reserves like they know something the rest of us don't. And they probably do, to be fair. ETF inflows are back on the rise, which tells you the paper gold crowd are bullish again. But it ain't just ETFs. Physical premiums are climbing in Europe and Asia too. People want the real deal, not some contract printed in an office cubicle. What it means for you? Look, if you're holding gold, nice one, you clever sod. You're smiling like a fox in a henhouse. But if you ain't got none yet, well, you might want to think about it before it breaks £2,600. Thing is, inflation ain't really gone anywhere. And with all this global argy-bargy, gold's still the safest dance partner at the party. Doesn't matter if it's a 1 gram bar or a fat quarter sovereign, the name of the game is protection. And gold's been doing that for 5,000 years, mate. Where's it going? Now, I ain't got a crystal ball, but the charts are saying $2,600 could be the next target in dollars, which could shove us up to £2,580 to £2,600 in sterling. If the pound stays flat. If we get more trouble in the markets or rate cuts come quicker than expected, she could blow past that like a greyhound out the traps. But don't forget, gold ain't just about price. It's about stability. It's insurance. It's wealth in your hand. Unlike my cousin Barry, who owes me 50 quid and keeps forgetting his wallet. So there it is. Gold's rising and the reasons are writ across the sky like a Ryanair contrail. Political chaos, central bank wobbles and a global appetite for something solid. It's sitting at $2,512 and £2,495, and if you're asking me, this ain't the top, it's just getting warmed up. Anyway, I better shoot. The missus is shouting at me again. Says I've left gold fingerprints all over her good tea towels. Can't win, can ya?